What's going on? This is your boy DGS Invest, and today's video we're going over a trading plan. Like and subscribe if this video has any value to you. Alright, so let's jump right into it. Alright, so the first part of the trading plan is choose your strategy. Alright, my strategy is supply and demand zones. I also use chart patterns, Fibonacci, and candlestick patterns, but I mostly analyze my chart based off supply and demand zones. That's pretty simple to me, and it's very effective. So that's where big money meets, and I just want to follow behind big money. I don't want to go against big money or anything like that, because I'm just a fish in the sea, So I build a confirmation strategy. So I wait until it gets into the supply and demand zones, and then I look for a market structure. So I wait until it breaks structure and goes into the direction. Like, say if it's in the supply zone, I look for sales. So I wait until the market structure shows me that it's going into a downtrend and it's coming out of that supply zone. So now that just confirmed. Or I'll look for an engulfing candle that's bearish coming out of the supply zone, or if it's like a smaller zone, I'll wait for a break in for it to retest. So the way I set rules for my stop loss is I put it below or above or below structure levels. So once it forms a lower low or a lower high, I put it right above the lower high. And if I'm in a sell, if I'm shorting the market, I put it under a lower high if I'm longing the market. So I put it above or below structure level. It depends on how big or small the supply or demand zone is for me to put it below or above the zone. So yeah, so those are my rules for the stop loss. So my rules for the target is I usually go by Fibonacci extension levels, or I trade to the next zone. I probably move my stop loss to a 2RR or 3RR, but as far as a target, Fibonacci or the next zone. That's how I like it. I feel like you can get more bang for your buck that way. So select your pairs. I mostly trade major pairs or GBP, JPY. They're just very liquid. I don't like it when charts are very wicky. I like clean charts. My favorite is EURUSD. A lot of people, I don't see a lot of people trading that, but it's just like that's the most straightforward chart in my opinion. Very great market structure. I feel if you're a beginner, you should always start with EURUSD, in my opinion. So choose your time frame. It depends. To get a real good look at the market trend, I go all the way. I start from the month. I go into the week, then daily, then 4 hour, then hourly, then half an hour, 15 minute, then 5 minute. I trade based on 15 and 5 minute. Those are my entry time frames. I look for a good entry. I look for, like I said before, broken structure on the 15 or 5 minute, and then I can have a tight stop loss. My stop loss won't be that significant. So, but my reward is like way more my stop loss. So select your preferred trading style. Whatever's available, whatever the market is showing me. I like to be adaptive to the market. I don't want to be like, what, I see it's a good trade, but that's not a continuation. I see it's a good trade, but that's not reversal. You know what I mean? It's whatever the market's telling me. I like to adapt. You gotta always be ready to adapt. So in my opinion, you should probably start with one pair, get comfortable with that one pair, and adapt to it. adjust. You might think it's one thing and then the market will do something. And you got to go with the flow with the market. You can't go against the market. The market will make a fool out of you every time. You know? You at the mercy of the market. You got to go with the market. You can't just go off your ego or anything like that, because it would definitely make a fool out of you. And you'll be sitting there confused like, I thought this, that, and the third. I was sure I was right. If you really always got to be right, then you're gonna get effed over. I'm trying to watch my mouth here, but you know what I'm saying? It's gonna leave you, vulnerable. If you're an egotistical type person, if you always got to be right, if you're an argumentative person with people in your life, like, you always got to be right. You can never admit when you're wrong. Trading is not for you, because it will prove you wrong all the time. And there's nothing you can sit there and argue at the computer screen all you want. You can yell, scream, cry, do all you want, but the market don't care about you. The market do not care about you. The market will take all your money in 5 seconds and keep on going. You can't call nobody, no refund, nothing like that. So always be adaptive. Always be adaptive. Know when to, and this goes into build your risk management plan. Know when to stop. Know when to cut your losses. Know when to admit you're wrong. You got to be able to admit, I was wrong. I was wrong. I was wrong. If I'm wrong 3 times, if I lose 3 times, I call it a day. I call it a day. Try again next day. The market seems like it's forever. I think it's forever. It looks like it's gonna go forever. So I'm gonna go over a EURUSD trade that I'm in right now. And show you a little bit. You see, I'm in crazy profit right now. But let's look on a daily and see how I charted this up. So, like I said, I like trading zones. These are my supply zones. This is a little slight demand off the, this is definitely a demand zone right now. So what I did was, how I created these zones was, it's like I got this last bar. This is the top of the mountain. This last inside bar. Well, it's on the outside, but the last bullish bar before it went bear. So I made that a zone on a daily. I made that a zone, and it retested it, tapped it again, and then came back down. And then the next zone was right here, came out of it, retested, and came back down. And then this was the last lower high. Well, this was really, but before structure got messed up. And then it broke through here. It went right through that zone, retested that zone, and then it started consolidating. But check out this consolidation. Let's take a closer look. It kept on hitting this line. I used this as a resistance line. Hit it once, it came back once, couldn't get past. It hit it again, could not get through. Came down, even tried, retested this whole zone. It didn't even touch it this time. And then I was like, alright, bet. Let's just get in the trade, put the stop loss against this, because of that, And that's a pretty tight stop loss. I think that's a pretty tight stop loss right there. I mean, definitely could have been tighter, but, yeah, this was a good stop loss. Look at that ratio, 12. Risk ratio, 12. So, I'll take that any day of the week. So, I'm in profit right now, and I just caught this so perfectly. It might retest this zone right here, but until it starts retesting, I'm gonna leave this trade alone. I have it going down to the next zone, and I made this zone on the daily, and it was based off of this. So, you know, I kind of caught this candlestick right here. It's a little high. So it's really supposed to be right there. So caught this, got the whole wick in the body, and yeah, so we'll see. We'll see if it reaches down there, but it looks really good. Look at that huge engulfing candle, and after this, after it just broke out of consolidation, I think we're gonna have another bearish day, but we'll see. We'll keep an eye on it. But that is how I trade and enter my trade, and you know, I really feel as though I follow my trading plan. So, you know, we'll just have to see how this plays out. Oh, and we can just throw in a Fibonacci just to make sure. You know, it retraced all the way to 3.8, and really, to be honest with you, this should really be take profit right there. That should really be take profit. If I'm going based off the Fibonacci, it's gonna end up in here. Definitely gonna end up in here. Let's see where this ends up. Let's see where that is. So, you know, kinda, you know, so yeah, this whole zone could be up here. Look how perfect that is right there. Fibonacci level. So, you know, that can definitely be take profit, and that's good enough for me. That's still 6.2. And that's good. So, yeah, that's how I trade. That's how I set my targets, and that's how I look for my entries. So, yeah, like, subscribe, comment down below any other videos you want to see or any other pairs you want me to analyze. And I'm out. Thank you.